Hey everybody, Carlos here from forex. Welcome to another forecast video, January 20th, 2016. Let's get right into the forecast review. Before I get started, I received a couple of emails that we did a 2-hour live presentation today of the inner circle. And yes, guys, you can click on the link below. You're going to see more information about the opening of the next new class in 2016. I promise you that I will transform your trading like never before by teaching you the right ways of learning how to read the market and create high probability reversal point. Today I'm going to be proving you a couple of the results that we had that you're going to immediately apply once you go through the process of the course and the coaching program at its best. All right, so just click on that link below if you are interested and ready to take your trading to the next level. All right, I'm going to help you do it accordingly. All right, we were looking for a sell setup on the Australian dollar. We're going to get started with that. So here it is. And as I said, always click the video below from yesterday and you will literally see the definition of price action and understanding how to read price action. So you probably would have said, hi Carlos, how do you were able to call that the market was going to go back and retest again that 68.39 as you mentioned it right there. And even though they did not reach the next upcoming two targets, we definitely were able to pull in a potential sell setup here on the Australian dollar. All right, so let's see the opportunity that this one produced for us. Here's a pivot step formation that I was just following through by the cross of the moving average, at least on the 1 hour chart. 30-minute chart crossed a little bit earlier, and that would be in the queue to go short right there, targeting that prior support right there, right off the bat. It's 55 full ticks or pips, right? So that was awesome. That was an awesome trade. The market just came back, and guess what? Back again into the synergy zone. So what we should do, I am not going to be taking any more trades. Now, for sure, I am going to share with you what I did, and so you can pretty much have an idea how powerful it is when you have the knowledge of understanding the price action reversals and potential reversal zones of the market itself. All right, so you notice here the small reversal box. I was able to identify that as a potential support. The market reversed, and I had the targets created on the upper side. So I'm going to share with you a couple of the trades that I actually did on the Australian dollar, and you will see that even though that I was just not swinging for the fences, I really knew up ahead in advance that I was able to participate because the probabilities were on my side until the reversal zones were about to reach. So let me show you. Alright, so here you can see on the 19th, right here, yesterday, the 19th, I was able to short the market. That was the last trade that I did, only for about $69, right? Pretty much, probably 7 pips, right? I got stopped out of my trailing. And this one also, it was a trailing stop. You can see here how it was a trailing stop that I was just triggered right here. This was the target price that I left. On a testing out, on a breakout, but nevertheless, here's the one that I was more proud of, and that was a 68.90 buy. All right, so it's pretty much 68.90. It was pretty much on the breakout. So I'm just going to show you here that I walk the talk. Here's a pivot step, right? Bouncing of the zone. I knew for the fact that these guys were about to bounce off the zone, and 68.90. You see it right here. That was a close of that bar, right a little bit further. I knew already that they were going for it, and I was just targeting at that point the 69.25. Right now, 69.25 was pretty much around this level right there. Okay, 69.25 right in there. So my target was this one, and I remember me telling you that my target was 69.34. In order for me to make sure that I get fill, I put my a little bit fills or floating order a little bit lower than that. I just let it go, and I got filled immediately, and that was a quick 35 full pips on my side. Hey, not bad at all. I'm not swinging for the fences. I'm not saying that I'm making thousands of dollars, but indeed it was a profitable trade, and I was able to forecast and predict the movement precisely what I know that the market was about to stop its track and reverse from it. All right, so this is the kind of scenario, this is the kind of information that you're going to be able to pull in once you get your hands on this coaching program that I'm going to be bringing to you right now. Just click on the link below, you'll see more information, and I promise that I'm going to teach you how to become a professional forecast trader. Alright, so what we should do right now, we go to the 4-hour chart, you know the drill, and then basically I notice that the market is, as we can see here, very straightforward and easy. The market is pretty much on a sideways. No more trades for me. That was pretty good as for demonstration, right, and create kind of a proof of concept here for you guys. So basically right now I'm not going to touch this guys anymore. As you can see, 1, 2, third time bouncing off the bottom. What could this tell you? It's only going to tell us one thing and one thing alone. These guys are getting ready for a potential reversal zone as we speak. A break above that 69.64 is going to dictate the potential of it, and I am going to be ready as well for it. So basically we should be sitting aside waiting for the market to break above those levels, bring back a potential impulse move, and then we'll find high probability trades on those terms in that direction. Okay. Alright, so British pound pretty much is finding kind of a bottom formation. We made it the right decision. For our chart, it's looking like it's getting ready and poised for a potential upward move. Let's just be ready on the sides. Once these guys break all these hurdles to the upper side, we're going to come back in with high probability trades on our side. So believe me, we're getting ready for a huge, nice move and start seeing some profits mounting up big time for us in multiple pairs at once. All right, only those who has the high probability are the ones that we're going to be choosing. But once again, this is something that it's part of our filtering system. Another thing that you're going to learn how to apply it on the inner circle. Here's a euro dollar. Obviously, clearly by the chart, there's a non-trending market here. We're not comfortable with it at all. Extremely overbought conditions. I'm expecting the market to start dropping anytime now, but it's having a lot of trouble. I'm not even going to waste my time with it. Dollar yen, the dollar yen dipped today a little bit further down. Very volatile, crazy market. Retest of the prior lows here, and is about to get ready on a very big upward move any moment now. But if you go to the MACD on the 4-hour chart, is suggesting that they should continue on a downward cycle, and it's not happening. Not even going to tamper with it, standing outside from it. Euro yen, exact same pattern. You can clearly see here how the market has a prior support, that the market has been testing it not once but twice, guys. You see how important support and resistance is in currency trading. This is the key, right? So basically, should we sell? No, I'm not selling where the market is supporting. So basically, we need to stay outside from now. I see here that the market is forming kind of a channel, slightly triangle formations here. So we're going to be sitting aside on the sidelines, of course, and not take any trades whatsoever. So pound yen dipped a little bit further and immediately rejected, breaking above multiple 4 hours highs, and right now as we speak they're starting to break towards the upper side. Alright, so basically what I need to know, or what I need to do here, is wait until this low has been taken. See it right there? Once the price breaks through it, guess what? It's going to bounce back from this level on and continue on an upward movement. And my target probably is going to be this guy right here, and this could happen between today and tomorrow. So I think we are going to have a great opportunity and position ourselves accordingly into a buy setup, as long as on the 4-hour chart the cross of the moving average to the upper side, just like it did in there, it's backed up by the price action and the MACD itself. So let's just take a look at that on the 4-hour chart. And let's see, the market already crossed it on the bottom side quite a few weeks ago, right? I would say a week ago, almost 2. And the market is having a lot of trouble on this, on the consistency, on bias market tendency. The momentum is just being for the 1, 2, and 3 for the 4th time for the fourth time, the momentum is spiking, and it's telling us that they really want to go to the upper side, and the market is just finally giving away the potential that it's gonna happen. It's gonna do it. It's gonna probably happen right now. I noticed a reversal pattern on the candlestick right there. So basically, all I have to do is just wait until at least this guys break the prior important highs. I would say this guy right there would be an important, and the low formation right here would be another important one. So expect the market to bounce either from this level right there at the 66.20 area, or possibly also bounce for the 66.90 and continue then to the upper side, hopefully. And that's what we're going to be looking for in the next upcoming days. All right, so just be patient. There's going to be a lot of opportunities for us to look for, and this is exactly what we've been waiting for a while. Okay, so for now, let's just sit aside. No more trades on these pairs. No more trades on the market right now. Let's just be patient. We were able to at least make some nice move on the predicting pattern of the Australian dollar. That pays out very well, giving us the opportunity to make at least the minimum of 10 to 15 ticks to the downside, right, until that target at least of 52 out of a total of 65 total full points or pips to the downside. So that was really nice on the Asian session and the Sydney session. And then afterwards, the market just reverse and get back into the saddle right here on the signature zone. So that's it for now. This calls you from forex. Welcome to the new Inner Circles students. Remember, just diving into the information. We're going to be killing it in the markets this year as everything starts to settle, and you learn how to predict the market for the short period, medium term, and long term perspective. Doesn't matter what you trade, you're going to be able to forecast price movements with high accuracy. This calls you from forex, and I'll see you in the next forecast.